Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Pavitra Parekh, and today we've got Sonal Bhutra as well joining in this Friday morning. And things are looking good, right? It's a strong Friday morning. The Nifty is well above 17,500. In fact, now inching towards 17,550. A 200-point gain on the Nifty. On the Sensex, we're up 750 points. And the stability, the gains in the Adani Group stocks have really calmed the market. So Adani Ports, Adani Enterprises, in fact, all the Adani Group stocks are higher in trade. And we will discuss that in greater detail. A substantial investment of $1.9 billion by one marquee investor, a very smart person, has resulted in a lot of stability. The promoters of the Adani Group are now flushed with cash. So therefore, if anyone in the market had any fear of promoter default, that is out of the window, which is why the PSU banks today too are rallying. So the Nifty PSU banking index too is higher by nearly 3%. Let's pull that up. 4% now, 4.2% higher on the PSU banking index. A couple of levels to watch on the way up. The 20-day moving average, 17,700. That's the first one. And above that will be the 50-day moving average, 17,868. And what's also helping matters is the Asian markets have got a green tick going for themselves today.
Yeah, I think pretty much through this week, today, of course, there's the Adani news, but through the week, we were really just swinging to what's happening globally, right? It is really the Adani Group impact that we're seeing across our market. So the banking stocks doing extremely well. Some of the larger names will be up on your screen. We haven't talked about how the exposure isn't too high, but just on sentiment, take a look at what's going on with SBI. It's up 4.5%. Some of the mid-cap banks will also come up, and you can see the kinds of moves in, say, UCO Bank, Punjab and Sindh. These are just a few of the names, but the entire pack is doing very well. The PSU Bank Index will also come up for you. It's a 3.5% move on that alone. The other sector which has done well today, and for the rest of the week also that we've seen a good move on, is the metals pack. So a few of those names will be up for you. For the week, the metals index is up 2.5%. Of course, this is after, sharp underperformance, but holding up this week. Some of the larger names will be up for you. But Sonal, it's interesting because all of this news flow has come through one up day, one down day. The Nifty is up around 0.3% for the week, but the action has really been in the mid and small cap space.
It has been. And while you're talking about how PSU banking names are doing well, just one index, that's the Nifty Realty Index, that's up 7% this week. And if we talk about the constituents, look at macro tech developers, it's up 43% this week itself. So I just wanted to highlight that the kind of action that we have seen in that particular stock, followed by Phoenix Mills, that's up 6%, Oberoi Realty 4%, Brigade and DLF also higher this week. So of course, this is also led by one stock, but Realty Index definitely in focus today, Reema.
That's the star sector then. But for the day, it's all about Adani Group. Remember, the promoters yesterday have sold stake in 4 companies, and they've raised a massive 15,500 crore rupees, a little more than that. Nimesh is here with the details of the buyer, which group has sold how much stake, and what the promoters now hold. Nimesh.
So the key to this whole transaction is the fact that the promoters have raised money from one of the marqueest name in the world, which is GQG Capital. I'll come to GQG Capital and who owns this. But in the news first, the promoters have raised 15,446 crores by selling stake in the 4 group companies. The companies where they've sold stake, in Adani Port, the promoters sold 8.6 crore shares at an average price of 600 rupees, raising close to 5,300 crores. In Adani Green, they have sold 5.5 crore shares, raising close to 2,800 crores. In Adani Transmission, they sold 2.8 crore shares, close to 2,800 crores. And the biggest one came in Adani Enterprise. There they sold 4 crore shares and they've raised close to 5,500 crores. So net put all together, they've raised close to 15,446 crores. Now, this is a big amount that they've raised. But the most important thing is they've raised from the marquee investor, which is GQG Capital. It's one of the biggest funds which is managing globally close to $90 billion. We heard Rajiv Jain as well talking, even in the press release, and he's spoken to the Australian media as well, where he's spoken about why he's convinced about this group and why he's betting on Adani, not only Adani Group, but on Gautam Adani as well. So that's the key thing. Just look at what GQG does. Like GQG globally manages close to $90 billion. That's a big amount that they manage globally. And they also manage a lot of money in the emerging markets. In emerging market portfolio, they own close to $12 billion. And if you look at the top India holdings, the best marquee names are there as far as the holdings are concerned. So ITC, HDFC Limited, Reliance, ICICI Bank, SBI, Sun Pharma, Tata Steel, HDFC AMC, Cipla, Power Grid, all the blue chip names are there as part of the key holdings within the India exposure of the GQG. So big investor coming in, the best of the pedigree from a global perspective, and the fact that the promoters have now managed to raise 15,500 crores, it will really help to deleverage the promoters, personal pledges and the balance sheet. But this will be a big relief as well, and that's showing up not only in the Adani Group stocks but on the financial names as well.
Oh, absolutely. And, looking at their India portfolio is just adding so much confidence, right, to what comes through when they invest in the Adani Group. But, in fact, like Nimesh was saying, Rajiv Jain, who's chairman and CIO of GQG Partners, said, I'm just going to read out the quote to you. I'm excited to have initiated positions in the Adani Group of companies. Adani Companies owns and operates some of the largest and most important infrastructure assets throughout India and around the world. Gautam Adani is widely regarded as among the best entrepreneurs of his generation. So we believe that the long-term growth prospects for these companies are substantial. That's the quote coming through from GQG Partners. But like Nimesh was pointing out, we're really seeing the rub-off effect of this on the financials. So Abhishek is here to take us through the exposure of the banks and NBFCs to the Adani Group. Abhishek?
Well, lenders, both banks and NBFCs do have exposure to Adani Group. There are, right now I have a list of 6 lenders who have an exposure of little less than 60,000 crore to the debt of Adani Group, and this forms about 0.96% of their loans. So amount-wise, obviously the highest amount is of SBI, given the balance sheet that SBI has. It is about 27,000 crore, followed by Axis Bank at 9,221 crore and 7,000 crore each coming from REC as well as PNB. However, one needs to look at the percentage exposure, that is percentage in terms of this total quantum to the total loan book of these lenders. So percentage wise, the highest exposure is of REC, which is at 1.7%, followed by IndusInd Bank at 1.52% and Axis Bank at 1.2%. And amongst these 6 names, the lowest percentage exposure is of Bank of Baroda at 0.6% of their loans. Back to you.
All right, okay, so that is exposure to Adani Group from the banking names. But post the stake sale in the 4 group companies, Citi estimates free float increase will lead to inflows. So Vivek is here joining us with all the details of what the note says and the flows impact as well. Vivek.
Well, absolutely. So, one important development that's happened yesterday is that given the fact that it was the promoter group entity that has actually sold the stake, what actually happens is that there is now an increase as far as the free float is concerned in 4 of the group entities. So, in Adani Ports, since 4.1% equity exchange hands, there's been an increase of the corresponding amount. Adani Green, 3.5% stake sale, Adani Transmission, 2.5%, and Adani Enterprises, 3.4%. So, now what Citi is anticipating is that in the upcoming May review of the MSCI, given the fact that there is now an increase as far as headroom in the free float is concerned, there could be inflows that could come into the Adani Group stocks in that particular index review. Now remember, to give some particular context, in the Feb review itself, there was a special treatment from the MSCI and the Adani Group stocks, but Citi this time actually estimates that there could be some inflows coming in. So Adani Ports, they are anticipating inflows of 70 to 80 million dollars, Adani Enterprises 90 to 100 million dollars, Adani Green 40 to 50 million dollars. Even more interestingly, what they're saying is that the scheduled outflows of Adani Transmission should actually reduce by half. Now, what this basically means is that in the Feb review, Adani Total Gas and Adani Transmission, there was going to be a weight decrease. However, given the fact that the stocks were continuously hitting the lower circuit, that was rescheduled or postponed to the May series. Now, the other stock to watch out for is Adani Enterprises. Remember, in Feb, there was a weight reduction that happened. Approximately $185 million of outflows was seen due to the MSCI reject.
Oh, thank you very much for that. And as we wrap up this 360-degree perspective on Adani Groups and the impact on the markets, Nimesh wants to, bring in a word. Nimesh.
What Vivek spoke is about the liquidity factor, which will come up in the May review. So that's something to track. But I guess the big thing to track going forward will be what is the money going to get used for. The promoters have raised 15,500 crores. There are multiple options that they can do, right? One is the big concern of the promoter pledge. Now, if you just look at the promoter pledge of these 4 companies, obviously that's the first expectations that, the pledge in these companies will go down and promoters will use this money for that. So that's something to track going forward for all these 4 companies. The other angle to track is, and that's the reason why maybe the market is rewarding ACC and Ambuja. Just take that chart out of ACC and Ambuja. Both are reacting 5% in today's trade. While there was no stake sale in these 2 group companies, but the way market is reading this is the fact that if you look at ACC and Ambuja, the open offer price for Ambuja it was 385 if I'm not wrong, and even for ACC it was 2200. So even now the stocks are almost at those levels. And the big thing to read would be now that the promoters have got this money, they can infuse this money as warrant conversion, which they have to do in Ambuja at 418 rupees per share. So I guess that's the reason why the street is excited about Ambuja and ACC, because now that now there is money with the promoters, they can go ahead and infuse the money into ACC, into Ambuja at 418, which was the conversion price. So I guess that's the reason why we need to track. The next step to track would be how the money is getting used by the promoters within the as far as the pledge is concerned, and as far as how are they going to use this money infusing into ACC and Ambuja.
Oh, Nimesh, thank you very much for highlighting that. So keep ACC and Ambuja on your radar too. So the big takeaway is it's the profile of the investor and the amount that he's committed, which has really excited the street and given confidence to the Adani Group stocks and, of course, the banking stocks, the PSU banks, the lenders to the Adani Group. That's the big takeaway. Get into a break. On the other side, we'll discuss commodities. Manisha Gupta joins in as always.
Hey guys, welcome back. You're still tuned into Trading Hour here on CNBC-TV18. It is a good-looking screen for the markets, 1.2% higher on the Nifty, so we're seeing an over 200-point gain. The banks doing very well today, like we've been pointing out, over 750 points higher. They're really powered through by what's going on with the PSU banks. But let's see if the world of commodities is looking as good today. Manisha joins us, and today she's going to tell us about a bunch of the soft commodities. Manisha.
Well, thank you for that, Pavitra. Yes, I picked up a gainer and a loser, but I'll start with what's been declining, and it's good for the companies, by the way. So the raw material in sense of cotton prices have seen a decline, so much so that we're trading at a 2-year lows right now. Remember, last year we saw all-time highs in case of cotton prices in the Indian markets, and it was trading at an 11-year highs in the international markets as well. But as of now, we're looking at good crop from major producing countries. Also, the USDA report suggests that there is weak consumption coming in from textile or cloth-making countries. For example, Pakistan, Bangladesh, Indonesia, US and Vietnam. While the Chinese demand is on the stronger side, but the major other countries are not buying as much cotton, and that seems to be weighing onto the prices. Also, the Brazil cotton output is estimated nearly 19% on the higher side on a year-on-year basis, so there is enough availability of cotton in the international markets. But what really seems to be doing quite well is the cocoa prices. We are trading at the highest level since December 2020, and this is because the global supplies have continued to decline. Ivory Coast, which is the major producer country there, the exports there have declared a force majeure, and there seems to be a deficit of around 150,000 tons, and that has added premium to prices. Also, West Africa is facing fertilizer shortage, and we've seen lower yields come in from there as well. The ICE inventories are at 10-month lows. The European Union ports also have seen cocoa inventories at a 10-month lows. The markets are looking at the fourth quarter. North America grindings also see a decline of around 8%. So there is less availability of cocoa, but the consumption continues for chocolate on the higher side, and that clearly has been a supportive factor.
Oh, yes. Three of us here in the studio can say that we are consumers of cocoa and coffee and chocolates as well. Manisha, thank you so much for joining us with all those details. That's about the commodity markets. Let's get back to stock-specific action. Kiri Industries is the company on our radar now. The stock has surged away in trade after the Singapore International Commercial Court confirmed the value of company's stake in Dystar. To understand what this means, because there has been an increase in the valuation as well, because company holds some stake in Dystar and they were supposed to receive some money. We are now joined by Manish Kiri, the Managing Director of Kiri Industries, to explain what this really means for the company. Mr. Kiri, good morning. Thank you so much for joining us. Well, it is a positive order for you. The stock is higher by 10% and it has been ongoing for so long, right? Can you tell us if this is the final order? Valuation has increased around $630 million. By when do you expect to receive it? Because Senda, which is supposed to give you this money for the stake that you hold in Dystar, did default, is something that you told us in January as well. Are you sure you will be receiving this money? And if yes, by when?
First of all, thank you for having me. And this is the final number. This is the final judgment. And this judgment from SICC gives an effect to the Supreme Court's decision taken last year in 2022. So there is no more legal proceedings in terms of the amount or value in Kiri's stake. This is the final order which we have received now. The enforcement and recovery of this order will start from today onwards. It may take few months. We don't know the exact timeline. Only thing I can say right now is the order is due to pay and due to execute buyout on an immediate basis as soon as this order is available. So we'll try to see how fast we can expedite the recovery and enforcement of the order.
So if the order says the money has to be paid immediately, why are you not confident about it coming? Why do you think that the actual amount will be realized only a couple of months later?
Going through many years of legal battle, going through several times, multiple times in the court, we expect some kind of delay. So to be cautious, and we don't know the response from sender, even though they have enough cash to buy to execute the buyout order, but we hope that it could be earlier. And I don't want to give the indication unless and until we have the certainty approaching or coming for transfer and for execution of buyout.
All right, Mr. Kiri, thanks for joining us. This is Pavitra. So, since you yourself are expecting at least a couple of months here, I mean, sender has defaulted earlier, like my colleague Sonal was pointing out as well. What if this payment does not come through? What is the recourse that's available then?
If the payment doesn't come through, if by any chance the order is dishonored by the other party, then the due course will take place, and then the alternate remedy will trigger, and court will look into the enforcement, and court would look into the other alternatives to recover this money and transfer to Kiri.
Okay. Mr. Kiri, I have been tracking it for a long time. It's been a long battle that you've had with Senda and Dystar as well. Can you tell us what kind of costs have you paid, the legal costs around this one? And if you do realize the money, and it is a big amount, what do you think this will be used for?
See, the cost which has been incurring since 2015. We are almost 8 years in the legal fight. And if I accumulate the legal costs which we have incurred so far for the last 8 years, including the expenses, lawyers, valuers, and number of other expenses which are related to the legal cases, must be close to more than $50 million.
Okay. Could you give us? Yes. Once
for the use of the funds, the proceeds, sorry, I'm coming to your second question which you asked. That has not been decided yet. Company has already formed a committee for the further investment, and we will look into the possibilities of where we can go from here. But I can tell you that the next phase of investments and expansions and the new sectors which we will enter into would define a new platform for Kiri. And I'm sure that the board will take a prudent decision on where to invest. There is a special committee already formed, and we will see, once the funds are coming, proceedings, we will come with the announcements after scrutinizing where the investments are to be made in the best interest of the shareholders.
Could you give us an indication then, Mr. Kiri, how demand is? Q3 has been rough. In fact, the first 9 months, your revenue loss has been close to 45%. And you did indicate that the industry downtrend is likely to continue in Q4. How has demand been currently? Any numbers that you could share?
Demand is almost close to half. And that is mainly on account of exports of dyes, intermediates, and related products. So this year has been one of the toughest year for the industry as well as for us. And we see now things changing a little bit. I am not too optimistic for the next couple of quarters, but we see revival on the domestic recovery. We see revival on the domestic textile sectors now increasing the demands. We still continue to see slackness in the export market due to several reasons. One is the sharply drop in cotton prices, where everyone is cautious right now. Second, places like Turkey, Bangladesh, Indonesia, going through their own problems. And those are the reasons that the export dependency is causing some kind of delay in recovery. But we see strong recovery from domestic market in the next few quarters.
Okay, strong recovery from the domestic market. Sir, how much does exports contribute to your overall revenue?
Almost 50%. Export and domestic stands for half and half for our total revenue.
Okay, just one final question on the margins. Can you tell us what you expect there? I do know a lot of your raw materials are, crude-based. We have been talking about how the crude prices have been very volatile, through at least the past year or so. Can you tell us what's going on the margin front and where you see that, say, in the next year?
Margins are under pressure right now,
Yeah.
but for the next year, we see at least we come back to 10 to 12% EBITDA as an overall performance.
Okay. All right, Mr. Kiri, always pleasure speaking with you. Thank you so much for joining us. So the stock is logged in upper circuit today, up 20% in last 2 days. They are still expecting to receive the money, but of course that will take some months and years as far as proceedings are concerned as well. Let's dip into a short break. When we return, we'll discuss market technicals with Mitesh Thakkar of earningwaves.com and also discuss his top trading bets. Stay tuned for that.
Welcome back. Markets are only building on gains. It's 15,566, a 250-point rally on the Nifty. The Sensex has gained and surged 800 points. Mitesh Thakkar of earningswave.com is joining in now for a quick technical check on the markets. Mitesh, strong opening, but it's only gotten stronger from here on. Do you expect this the upward momentum to continue through the course of the day?
I would think so. Good morning. So, I was maintaining that in case we start getting past 17,500, then there's a good chance that we'll see 17,650, 650 zones, and then possibly 17,750 zones as well. So stay positive. I think now 17,500 becomes your intraday pivot, and therefore a 30-40 point correction, if it happens towards the later part of the day, I think would be a good buying opportunity. On the stock side as well, therefore my views are reflected there as well. So we have two buy calls. Concor is a buy with a stop at about 594 levels and a target of around 630 on the upside can be looked at. The PSU banks have joined the rally. We have been advocating some buys earlier there as well. Canara Bank today features on the list. Keep a stop at 295. Look for targets of 315 here.
All right, Concor and Canara Bank on your trading list. Mitesh, thanks a lot for joining us with that quick check on the market and those individual stock ideas as well. We do need to get into a short break, but there's lots more market action coming up on the other side, so stay tuned.
Welcome back. While the momentum continues, Nifty has built onto the gains that we've been seeing. It is at the day's high. A 250-point uptick on the Nifty is what we are seeing right now. So good day for the bulls. And in the Nifty pack, there are a couple of names which are at the day's high. So we have JSW Steel, Bharti Airtel, Titan, Hindalco. So some of these metal names and the heavyweights which are contributing to the Nifty gains that we are seeing right now as well. In the broader markets, we have stocks like SAIL. So as I said, the metal index that is doing well. So that stock is at the day's high. We have L&T Financial Holdings as well, which is doing well, and Bandhan Bank in the broader markets is the other one. But it's a good day for the market, so let's hear out some market opinion which is coming in from Harsha Upadhyay of Kotak Mutual Fund on what he sees is the tracker or the idea of markets going ahead as well.
We remain fully invested even at this point of time. Yes, if you look at our portfolios are cautiously optimistic in terms of economic recovery in the domestic market. Most of our positions are looking at businesses that have serious linkages in terms of domestic growth recovery. And to that extent, we believe that this is the basket which will be resilient in terms of earnings growth and also has room for valuation re-rating if economic recovery follows. We did see in the past couple of months, especially year to date, banking sector underperforming the broader market. But we won't read too much into that because clearly I think this is going to be one of the sectors which will deliver better than market earnings growth, and also there are no big asset quality issues at this point of time. So to that extent, we believe that this is likely to outperform the overall market, and we continue to hold our positions in the sector.
All right, that is the word coming in. But a quick look at the markets, which is just holding up extremely well. It's a 250-point gain. So at the high point of the day, like you can see on your screen, we're above that 17,570 mark on the index. Of course, it is the Adani stocks which are, really powering through today. Adani Enterprises now up 14%. Adani Ports is seeing an 18% pop as well. So that's what's coming through. And of course, the banking pack also doing very well. But with that, let's cut across to Shireen, who is in conversation with Shailesh Chandra of Tata Motors. So let's go across.
Well, Tata Motors has hit the production milestone of 5 million passenger cars today, incidentally on the day that marks the birth anniversary of Tata Group founder Jamshed Tata. What's more, the auto giant has produced 1 million of these cars in the last 2 years alone, even as it weathered the pandemic crisis and the semiconductor shortage. To talk more about the automaker's landmark in the passenger vehicle segment, its plans for electric mobility and the key challenges facing the industry, we're joined by Shailesh Chandra, the Managing Director of Tata Motors Passenger Vehicles, exclusively with me here on the record. Shailesh, many thanks for joining us here on the show, and congratulations on hitting that 5 million production number. I was just taking a look at the trajectory. The first million was recorded in 2004, the second million in 2010, 3 million in 2015, and 4 million in 2020. So, Shailesh, here in 2023, what's the target that you're setting?
Yeah, first of all, thank you, Shireen, and happy to be on your show. It has been a momentous occasion for us, hitting this 5 million mark, and thanks for sharing the number of years that we took for every million. Yes, the last 1 million has happened in the fastest period of time, less than 3 years, actually exactly 2.5 years, as compared to 5 to 6 years that we took for the previous millions. As far as future is concerned, I think we have one very strong foundation of where we have reached in terms of our performance. In this financial year, we are hoping to cross 500,000, which means there is already a certain run rate that we have achieved. And I'm sure that the next 5 million, with the growth that we have in the electrification area, the new models that we showcased in the Auto Expo, with all that expanded portfolio that we'll have in very relevant segments which are going to grow fast and big in size, I'm sure that the next 5 million should happen in maybe less than 8 years, is what I hope.
Okay, the next 5 million in less than 8 years, that is what you're expecting, Shailesh. But, you talked about that 500,000 number that you're hoping to clock by the end of FY23. So no hiccups there at all? You believe that you will be able to get there?
We would have already rolled out by now 500,000. By Feb, we would be left with about 4,000-5,000 to cross the 500,000 mark. So I'm sure we should be much beyond that number of 500,000 as we end this financial year.
Okay, so ahead of that number by the end of this financial year. You talked about your electric mobility pipeline as well as the electric mobility plans and also the expansion of the portfolio. So let me ask you today, in terms of both greenfield capacity addition as well as brownfield capacity addition and the current utilization rates, where do you stand today, and what kind of capacity addition can we expect given the portfolio enhancement that you're working with?
See, we already have a capacity from the existing facilities, which is the 3 facilities that we have, one in Pune and the earlier one in Sanand, and the new one which we have acquired right now is the new one. But if I leave that aside, and one we have in Ranjangaon, which is a joint venture with Fiat, if you know. So these are the 3 factories where we are currently making our cars, and already the capacity is to the level of 50,000, which at an annual level means about 600,000. This new capacity that got added by acquisition of the Ford plant in Sanand, that further adds to about 300,000, which can be further expanded to 420,000. So roughly, we are pretty much, as far as capacity is concerned, closer to 1 million mark, both PV and EV included. Right now, since we are in the generation 1 EVs, and now we'll be rolling out the generation 2 EVs, just to clarify and explain what is the generation 1, generation 2 EV, these are more converted products. As you have seen, the Nexon got converted to an EV, then Tiago got converted to an EV. The base platform is the ICE vehicle, which is getting converted. In Gen 2, we go for more intrusive modifications in the architecture so that then it can be further electrified with higher range cars. The generation 3 cars will be the pure EVs. So therefore, the generation 1 and generation 2 car pretty much share a lot of common parts and the common facility with the ICE vehicles also. So we have a lot of flexibility in the 6 lakh capacity that we have in the existing plant. to make a lot of EVs there. And when we start the new facility in Sanand, which is the Ford factory that we have bought in the Tata Passenger Electric Mobility entity, this will also make ICE vehicles to start with, so that we utilize the plant faster. And also EVs in any case are being made in the other 3 plants also. But if I talk about the end state, yes, this factory would, I believe, would be doing mostly electric vehicles going forward. But that's the capacity picture.
Okay, so at this point in time, no need to add further greenfield capacity. You have enough capacity at hand. Let me ask you, Shailesh, since we are talking about electric mobility and your EV plans and Generation 3 product line specifically, there have been a lot of reports and speculation that you are in the market to raise more money. 2021, we already saw that $1 billion investment coming in at a valuation of over $9 billion. Can you confirm whether you are looking at further minority stake sale to raise money at this point in time to fund the electric mobility plans?
So Shireen, I would not be able to comment on that speculation, but as you know that a year back we had already raised $1 billion and the whole funding got closed a month back or so. So we are, for the current few years, we are pretty well funded. Anything beyond that is a comment I would like to only offer at the right time. But at this stage, I have nothing to talk about on that speculation.
Okay, so let me piece together what you have said. A, you don't want to comment on speculation on whether you are looking to raise further money, but you also said that at this point in time, you are well funded after having raised that $1 billion that you did in 2021. So would it be fair to say that this is not something that's on the anvil, or not something that the company is actively looking at or considering at this point in time?
That's an interesting one, but I must say that I said that we are well funded for next 2 to 3 years. There are many other ways of raising the fund, including debt route, but we are absolutely open to going any additional route, and anything is possible. So therefore, I would not like to say yes or no, but from us, any formal comment on that will come at the right time, is what I would say.
Okay, so neither yes nor no, but of course that leaves the door and the windows open for all options, as you point out. But Shailesh, let's talk about demand now, and let's also talk about the product pipeline. What can we expect now in terms of demand? The commentary coming in from your peer, for instance, from Maruti, suggests that a 5 to 7% growth in FY24 is possible for the industry, given the fact that we're now in an era and an environment of higher interest rates, etc. What's your own expectation?
Yeah, I would definitely concur to a single-digit growth that we expect next year. Remember that it was a exceptionally good year, which was FY23, which we might see nearly 75% growth in this particular financial year. If you remember last financial year, it was at a level of 3.05 million. We should be ending this financial year at about 3.8. So a lot of pent-up demand which was sitting in the market has got released. The supplies have been stable. The semiconductor crisis that we had faced in FY22, that was not seen to that extent in FY23, except for few components here and there. So a very good supply and therefore release of pent-up demand now leaves less scope of a double-digit growth, I would say, next financial year. Actually, retail would be, I would reckon, about 3.7 million this year, so 100,000 less, which would mean that even the channel inventory is going to be slightly higher than where we started at the start of FY23. So I would also concur that, greater than 5% growth would be, I would say, still a good one, given that it would be touching nearly 4 million, which is a very strong market, I would say, gives a lot of opportunities to all the OEMs.
Yes, but single digit is what you are expecting, in line with what your peers have also said. Let's talk about the EV pipeline as well as the launch pipeline then, Shailesh. What can we expect in calendar year 23? The expectation is that we could see the Punch out in September. Lay out for us what the roadmap is as far as launches and the EV pipeline specifically.
You know, we have made a statement that in 5-year period, now actually 4 years, last year we had made the statement, we would be coming with 10 products, and the distribution of 10 products were 4 generation 1, 4 generation 2, and maybe 2 generation 3 product. We have already launched the 4 generation 1 product. Tiago EV was the last conversion product. Now we are going to start with series of generation 2 products. Some of them we showcased in the Auto Expo. If you see the Sierra or if you see the Safari EV that we, Harrier EV that we had shown, or the Curve EV that we had shown in April 22. I think these are the products which are going to come in the next, I would say 2 years, time frame till FY25 we'll have all these products. There are few more additional products which might come. Punch EV is definitely one of them, and I would not like to confirm a date on that, but yes, the intention would be that in the foreseeable future, and say by 2024 we should be able to bring that vehicle. But at this stage I won't confirm the date till we have progressed to a stage that we can confirm the launch. So yeah, those are the products I would say.
Okay, yes, 10 launches, that was the guidance that you had held out earlier as well. Just on specific deals as well, there has, of course, been the announcement that Tata Motors has made with Uber, and that is a partnership that you will supply 25,000 EVs for the Uber fleet network. Are we likely to see similar sort of transactions, similar deals that you are working on currently? And if you can also lay out for us what the timelines will be in terms of being able to supply Uber with these 25,000 electric vehicles.
See, fleet is a very interesting segment for electric mobility. As you know, even government has always set their vision to first electrify the fleet mobility services, because it helps in catering to more people who use one single car, and therefore it has a very good impact on the reduction of carbon footprint. And we are one of the only players in this segment who's providing cars in the electric vehicle segment. In this category we have seen primarily the cars being used for employee transport by the MNCs and IT companies for ferrying their employees from home to office and vice versa, or the new age mobility services, e-hailing companies. You have seen our earlier MOUs with Blue Smart, EV Era, and these kind of companies. So there has been a decent level of business that we were already doing with these fleet operators. We would have about sold more than 5,000 cars already in this segment, and now we have signed an MOU with Uber, which is the biggest ride-hailing company, as we know, among the largest. So they have an intention of doing 25,000 cars. They don't buy, as you know, they mostly attach the cars, so they will be working with various fleet operators whom we also have a very deep relationship with, about 40-50 of such big fleet operators. And over a period of, I would say, 24 months to 30 months, they would be targeting to deploy these 25,000 vehicles. From a capacity perspective, we are absolutely fine. We can cater to at whatever rate the fleet segment would require us to supply.
Shailesh, you spoke about the fleet opportunity, but what about the replacement opportunity? The budget, for instance, had talked about the need for both the central government as well as incentivizing states to actually go in for replacing older vehicles. I would imagine that many would consider electric vehicles as possibly an option, but are there any active conversations on at either the state government level or the central government level in terms of the replacement opportunity? How do you foresee that opening up?
I think it's a very big opportunity. There are hundreds of thousands of vehicles in the government that are running, and we have had some initial conversations, and the mood that we saw was to replace these cars with electric cars, and therefore it's a big opportunity. I would say that it might take few more months before we get full clarity in terms of how this is going to really get implemented and enforced. And I think we should be able to comment on this in the next 3-4 months. But the intention of government clearly seems to be to move towards electric mobility as far as these replacement of these cars are concerned.
I understand that the conversations perhaps are preliminary at this point in time, but can you share with us any details on what the arrangement is likely to be? What we saw previously was the EESL moved tenders, and we saw the problems that plagued that particular route and that particular tendering process. So what should we expect? Where do the conversations lie in terms of how this is going to pan out, how it's going to work?
Yeah, Shireen, so that part is still not clear. I think the earlier model of the government was to source it through ESL, through wet lease or dry lease, both. But still, as far as what got announced in the union budget, this modality is still not clear. Certain, government departments at times, come with their own tenders. So we'll have to see. It might be a mix of both, possibly. Certain government departments might go with ESL, or they might float a tender on their own. We'll have to look and we'll have to wait and watch, I would say.
Okay, that's as far as the replacement opportunity is concerned. You said modality is still awaited from the central government. But Shailesh, let me understand from you what the challenges currently are in the marketplace that you observe. One, of course, is, as I pointed out, interest rates. Are you seeing that having a bearing on buying decisions as of today? Some of the other challenges with respect to semiconductor shortages, etc., have started to alleviate. So what, to your mind, are the big challenges that you are factoring in or gearing up to face?
I would say that before FY23, the 2 financial years prior to that were a phase of great uncertainty, I would say. One was mostly on the supply side, where demand was extremely robust, but that supply-demand gap led to a lot of pent-up demand, and therefore there was a lot of urgency in the customers that we saw in that phase. As the supplies have been very stable in the last 1 year, I would say 4 quarters or 5 quarters, and now the cars, most of the regular cars, I would say, except for some of the very popular cars where still there is a waiting period, there's lack of urgency in the customers. So it takes more time to convert a car from an inquiry stage to retail. So that time seems to have got elongated a bit. There's lack of urgency. So that's one observation I would have. But the demand still remains strong. I would say demand level is strong. The time it takes to convert into retail has got a bit longer. On the supply side, as far as semiconductor is concerned, there were so many components which used to face shortages on semiconductor, and there was frantic buy of semiconductors from the open market distributors, paying premium for those semiconductors. I think that has got elevated a lot. There are only few components that you face problem even and often, and that's it. But broadly, I would say it is in control. Off late, there has been a stress in some 1 or 2 critical components, but so far we have not got impacted. Let us see how things would be in April, but at least for March we don't see any issue. But April we'll have to continue and watch for those 3-4 critical components, I would say.
Okay, so there needs to be a watchful eye, a vigil as far as 3-4 semiconductor components are concerned. But Shailesh, before I let you go, Q3 numbers swinging back into profits after 7 quarters. Do you believe that you're going to be able to continue to build on that performance, both in terms of profitability and margins?
I'm sure. I think, also all the 3 businesses in Tata Motors, commercial vehicle, passenger vehicle, India, as well as JLR, all are doing well. The semiconductor crisis, which was really impacting JLR a lot, that is also seeing improvements. So broadly, I think we should be able to sustain and improve from here is what I would imagine. But we have to be cautiously watching on the supply side also.
All right, Shailesh Chandra, we will leave it there. Appreciate you joining us here on CNBC-TV18 on the record. Thanks very much for your time. Congratulations once again on the 5 million milestone, and we wish you and your team at Tata Motors the very best of luck.
Thank you. Thank you, Shireen.
Well, that's it then on this edition of On the Record. There's a lot more coming up. Don't go anywhere. We're back in a minute with more.